All right, hello everybody. How we doing? This is Mr. Anderson, True Crypto 28. Just wanted to give another video. I'm gonna try to feed a few videos slowly. I don't want to give too much information. The last video was 30 minutes and really didn't touch on anything. So, one of the concerns about getting the indicators out quickly is that people will not understand them or receive too much information. So it's a valid concern. So reality is most people gave very good feedback. They love what they see, and maybe some are too excited. And I also got one person who was very concerned about what they saw, which is great. I'm glad to hear that because I want to explain. Because usually it's going to be an element of one, not understanding how the signals work, or two, an element of time frame, or just getting used to it. Eventually, after everyone has a course next month, you're going to be in a position to where some of this is second nature, and some of the issues you might see, you just fly through. And one, either recognize that something is either a false signal or that you're just simply on the wrong time frame, because everything is relative to a time frame. So we have this chart up here. The reason I have this is because this is the one that I was sent. And I'm glad that the example came up because it was good questions, right? Basically, they were on the golden child. Now, the first thing I want to repeat, and I'm going to repeat this for a while, in all your indicators in the beginning, go into format. Make sure that you are on inputs taking off these boxes. It's very important because it's just going to give you more signals, and I'm sure a lot of people think there's too many already. But when you become an advanced trader, you're going to want to see as many signals as possible because you'll quickly be able to decipher what is a legit signal and what is not. We'll get into just a very little bit about that, but there was a great question that was brought up, and I wanted to address that question. Let me go ahead and get into that a little bit because I thought it was excellent. I want to hear a concern like that for sure. I may not be able to address it within a minute or an hour or even a day sometimes. Forgive me, there's a lot of things that are being worked on to make this whole experience beneficial. My plan is to make everyone here a very good trader by the end of this process. It's not a race, it's a marathon. So in some ways you have to bear with me on that. Let me go ahead and talk about what it was. So basically, I want to zoom in. And I'm going to zoom into this particular date, June 28th. What do you see? You see on a daily scale, there's a short signal. And then what is basically a local bottom, right? This area, if we look at a zoomed out area, there's nothing here, right? On this golden child, there's no buy signals or anything like that. So I want to point out a few things. Why would that occur? Why did I get a terrible short signal right here the day before it flipped? And why do I not have any buys on this big run? Moreover, why do I not have any sells on this one over here? Well, first and foremost, keep in mind these are indicators. They're algorithms that are set to specific criteria, and they have to meet those criteria. Within the construct of that, there's also protections that are put in, right? So in this case, it's pretty clear that there's no way that it missed these signals. It just didn't. Criteria was met. But because of the broader picture on this time frame, what ended up happening is the safety criteria are protecting the buy signals. Now, one example of this, and I'm going to have to flip around a little, so forgive me for any mess you've seen. Again, I'm going to focus on this date, June 28th. Okay. All right, so on June 28th, as an example, we're going to go to a different exchange, right? And here's another problem. In crypto, you have so many exchanges. It's not like traditional market where you have a couple exchanges and they all represent different things, and it's just very few and they're liquid. In crypto, it's not liquid, right? And you don't have a lot of good exchanges, and it means it's going to cause different signals also. So when we go to Binance, what do we see? June 28th. So on June 28th on Binance, this is intriguing. I mean, it actually is mind-boggling to me. Not only did you not get the short, but you got the buy. So this is amazing. Now, I just took a quick look, and on most of the exchanges, it went the other way. But there was something happening, whether it's the liquidity, and it was basically creating a scenario to where the protections that are put into Golden Child were not allowing for these buy signals on that exchange. So here we go. No short, buy. So you have a buy from here, right? Now, another thing is when you get these buy signals, guys, you guys are going to basically determine what's my exit, right? If you have a better feeling of what's going on, then you'll make the determination of your exit. But what I want you to see is that without teaching you this, because that's what the course is, and 40 hours in continuing education, we're going to basically get into all of these things. But some basic TA is going to allow you to make some decisions on where to cut your losses, where to stop your shorts, where to cover your shorts, things of that nature. So that's always going to be an important factor in making those determinations. And the other thing is that you might see a buy signal and then a short signal. Does that mean you should buy and then wait for the short signal to sell? Not at all. Now, it may work out that way, and I'm not blaming you if you choose to do that. But you got to keep in mind that there's a lot of information in between a buy and a short. And I'm doing this because I don't want people to miss out on the run that goes from here to there. I rather that person even get chopped up a little bit so that they can gain the majority of a run. So really quickly, if I'm jumping around a little bit, forgive me because I'm trying to get through a lot of information in a little bit of time. And as I mentioned, I'll continue to put these videos out because I want you guys to have as much help as possible. Just ignore this for a second because I have a lot of information on here. So this was the targeted area that we spoke about. I still want to go back to the other signal, and I know it's the same on BitMEX, which is here. So here's how it looked to him, and I understand his concern. Why was there nothing there? We already showed that on a different exchange it actually wasn't like that. So that's not the algo's fault. That's basically something to do with the exchange. But I want to get into the why. All right, I'm going to show you something. This particular indicator is called parabolic SAR. You can load it up, parabolic SAR, SAR. It's pretty easy to find if you go into here. Just, I believe you could just type in SAR. Right there, not the strategy, this one, parabolic SAR. Just type in SAR and put it in. And why? Why am I doing that? Because I'm going to show you something interesting. A parabolic SAR is an indicator which is going to create a scenario in which they're trying to say local uptrend, local downtrend, or at least what's more likely, uptrend or downtrend. And the way this is determined is you're seeing a line underneath that is showing an upward slope. And when the price comes down into that, we're not going to get into the measurements or break it down because that would take a half an hour. We'll get into that eventually. But ultimately, the point being is that the measurement of how this works is that once it's hit, it's then showing a top, okay? Or what could be a potential of a down move. But as soon as that is met, it goes back to the potential of an up move. As soon as price runs into that, same thing, potential of a down move. Now, I'm not using specifically this setup. I use a different criteria that's similar to the SAR as a level of protection. So one thing that's more than likely happening is the signal's coming through. But this parabolic SAR it's not parabolic SAR as I mentioned, but the similar criteria that's in the algorithm is as a protection, not allowing buys to print while in downtrend mode and not allowing shorts to print while in uptrend mode. Understand? This is something that's very important because it's creating a scenario to where you might say, well, wait a second, why wouldn't it show a short here or there? Well, it may have, right? And I'll give you an example. These buttons that we tell you to not utilize yet, if we put in something like potential buying in shorts, it did show it. You know, even on this particular exchange, it gave you 2 warnings of, hey, this is a potential short. Now, I'm not even going to go down the road of the potential shorts and potential buys because that can confuse you. Basically, the brief summary of that is this. It's recognizing something that's changing from this uptrend mode. That's all it's saying. It's not saying anything else. Now, what happens is this. Maybe the short signal was in here. I'm going to take this off because I don't want this to confuse you. Maybe it was giving a short signal in this range, but because the parabolic SAR was still showing an uptrend of sorts, it didn't want to print a short. Why? Because you got to understand this. Given the nature of this particular move, we could say surely, oh, this was a definite top. We can draw, I mean, I called it a top, if anyone knows. You know, if they were following, I said, yeah, I believe that's a top. But I'm not going to be able to make the criteria in an algorithm that's going to think like me. It just cannot happen. I mean, it's not reality by any stretch of the imagination. But you know, if anyone that knows Fibonacci, we could say, look, this leg from here to here, you take your Fibonacci line, you draw it. We'll teach this later for sure. And this leg from here up was now a golden ratio right here, 0.618 move. And this is an idea for a possible top. But that doesn't mean it's the top, right? Doesn't mean it's definitely going to be the top or anything along those lines. In fact, it would be very realistic for people to think that this was the top. I mean, why wouldn't they have thought that? Look, I'll give you an example. Now, again, there was different measurements such as momentum and things of that nature to tell us that, no, this was not the top, and I didn't believe it was the top at the time, but I could have been wrong. Maybe it would have been the top. And let's look at why. First and foremost, this was an attempted pivot, right? That failed. You know, if you had most of your pivot indicators at the time, they would have said, hey, this is a pivot. Good thing about those pivot indicators is they like to repaint, so they would then erase that signal and say, no, this was the pivot, and then erase that one and say, no, this was the pivot. Or they'll hold it up. There's different types that will say that's a pivot, that's a pivot, that's a pivot, that's a pivot, which is fine as well. But let's not focus on that. Let's just focus on doing something along this lines. Now, what are we doing with these random lines? Well, basically, this was a level of resistance. It stopped out and went down. Came back down, made a lower low, put ourselves in a lower high, put in another lower low, and then finally created a situation where this level would have been thought of as more of a support once you broke out. I'm not going to draw the line because I don't want too many lines in here. But what's the purpose of doing this? Well, when we got here, excuse me, let me remove that for you. When we got to this level, remember these are on a daily basis, we're already seeing resistance. And one, if you don't want to count that one, that's fine, but 1, 2, 3, this one, an ugly reversal type candle, right? I mean, it's just ugly at a top of a move on resistance. And this was strong resistance. I'm not going to put the volume profile in because, again, we're going to confuse some people. But the idea is on a daily scale, it was very understandable to think that, hey, this was the top. But what ended up happening is it held up and then eventually skyrocketed up near 8,500, right? So shorts got burned here. This was a spot where shorts would have got burned. Why didn't it print a short here? Well, same reason. So it might have showed the criteria for a short in here. And by not printing it, it would have saved some people a lot of pain, right? You would be really upset if you got short here or here and held on and it took off on you. So the criteria, which isn't this exact criteria, but this is good for you guys to follow along as well, especially on different time frames, that might be helpful because in reality, if you're trying to play a safer game, you want to be a little bit wise as to where you're taking your signals. The other way this is helpful is this. Let's look at a buy signal, right? The other question that was asked was, and I want to focus on his questions, right? So the gentleman brought up a good question. He said, well, what about this short? It ended up being a terrible signal. There's no question about that. I'm not trying to defend the algorithm. But by using something like this parabolic SAR, it can be very helpful because we can measure when the possibility of the end of this ride is, right? So look at this. Early signal at the very beginning of the SAR, no matter where you got it. The signal might have triggered right there. The signal might have triggered there. You might have waited till the daily close. That's up to you, right? And we'll talk about entries and going to lower time frames and how to do those type of things. But if you picked up on that short signal and saw this as resistance and then your short printed and you said, no way, I'm jumping in. I love that. Good for you. And what would have happened is you would have ended at a perfect time because you're seeing price would have had to get all the way back up to here to be considered in an up move again, right? So that's a big jump from either here, there, or there. So you had a lot of room. Then as this drops down, the closer it gets to price, the more concern you should get. What else should that tell you though? Let's spread this out. Well, here you're getting a short signal again, right? Well, you missed this short signal. What's happening here with this short? You're still far away, so it's fine to take it if you want on a daily scale. It's just you have to get used to understanding the distance traveled, right? Now, it would have worked out if you held on all this time. You could see it went lower. But understanding how far you came, basically, this short signal is probably somewhere in this range. I can find it and locate it on the algorithm. It's not important. I mean, ultimately, let's just say at 7,300 it triggered as an example. Well, now you're getting this next short, somewhere between 6,500 and 6,300. Some of it is greed, right? So sometimes you'll get a short signal here and then it drifts and you'll get another one. Hey, good idea, let's re-enter. Or what I would say is wait till you get what's called a fractal. Fractal is basically going to be usually about 5 candles on a daily scale. If it's 3 that are clumped together within the same candle range. Again, we'll teach these concepts later, but just to give you a basic understanding of that, is this is a fractal. Why? Because you have 3, usually you want 5, but on a daily scale it's kind of hard to say you're always going to get 5. You're not. So what happens? You're getting these, you got a center bar, a center candle, and within the same range, connected basically, 3 in a row, and basically that's a consolidation before the next move. And of course what happens, down move, that's hindsight. Obviously it's a lot easier for us to see it there, but same thing occurred here. This is a fractal. These are impulses and then a fractal of some sort. Then this, you're getting sort of a counter move, right? It probably printed some sort of buy, but because of the criteria that's used, which isn't quite this SAR, but something similar, it's basically not allowing that buy to print because you can see the move is weak. So ultimately, it still didn't run into this scenario. And if you would have got a short signal here, it would have been beautiful. And there probably is an indicator that does give a short in one of these candles. And if you got it early enough, it might have made a lot of sense to get it. But the question was this one. Well, now here we are. We're 1, 2, 3, 4 shorts in on the same short. This is all one short technically. Ultimately, if you got short here, you may have covered beforehand, or you may say, no, I'm going to hold on and see how far I can ride this. That's completely up to you. Now, these would have been great sell points as well, and maybe you're waiting for a reentry. Again, if you were waiting for a reentry, you don't have to wait for another short signal by the algorithm, right? You know that this is in short. It's showing it as being short. And you know that the parabolic SAR, which is a pretty good tool, hasn't been met. So now if price, once you get into this range, if price starts to pop into this, well, then this SAR is going to flip. That's what happened here, right? But ultimately, you guys have to make that decision, especially if you miss the initial short. So that's the short answer, right? Keep using the word short. That's a short answer for this situation of why that occurred. And then again, we also explain the scenario as to the other exchange is another reason why it occurred. Now, what else can we show you? Well, first of all, let's peek at the other indicator, right? So we have God's Eye, which is this indicator right here. And each indicator is going to do something a little bit different. So whereas we had a concern over the signals that we were getting, we can see that God's Eye actually did a much better job in this case of providing signals on those actual candles that were entry candles, or should have been entry candles. For instance, I said, here we are, we went from a fractal to a drop. Now you might see that and say, well, wait a second, I'm not going to enter till here, and if that's your trading style, so be it. But if you were actively looking at that moment, or if you set an alert for this sale, that probably happened closer to this range. Of course, again, I'd have to look that up, but basically on God's Eye, it is a momentum signal. And when it says short, it means that the momentum at that moment is strongly to the short side. Now, it's only a measurement of this bar, but what we can see historically with Bitcoin, especially, even Ethereum as well, and we'll go into that in 1 second, but when you see these pop up, it's typical that a stronger move occurs. When the buy prints, it's typical that a stronger move occurs, right? When the short comes up, a stronger move. Same type of scenario is occurring. Now, I do have what's called God's Eye 2.0. It's a little different. I'll take this on and off. Look at the screen here at all these particular buys and sells. And I'm going to take off 3.0 and then add it back. And I'm going to take it off and I'm going to add it back. So what you see is this one does have some earlier calls. And I can give this to everyone if they want it, right? So the idea, though, is that the 3.0 has a little bit more level of protection built in. The 2.0 is going to give you those sharper calls. You got to buy here, buy there again, right? Short before, short during this big candle, etc. So you can have that. You can utilize, SAR with it. If you would have been fortunate enough to get this short, and keep in mind, again, you can go to lower time frames. That's a big key on all this. I'm going to switch really quickly to to a lower time frame to give you guys an understanding of some of this. So on the lower time frame, this was giving you a short in this range, and then you had the fall. This is a 4 hour, and then the fall, right? Now you're also going to get a ton of crazy signals because it's measuring momentum in one bar, but you'll often see this where it's like, wait a second, if you're getting 3 or 4 candles in a row, that's a great signal. You know, if you got a signal here and within 3-4 candles you're doing well, you should be happy. Then it's a matter of TA and making a decision of how far this particular move is going to go. Same scenario, you know, short here, and look at all those candles that you get. You know, these are things that you should be celebrating. What you don't want to see is it's a buy and it goes the opposite way. No, that's a bad signal. A bad signal is not it says buy and goes sideways. A bad signal is it says buy and it completely sells off. And that will happen too. There are times where that will happen. But it's important to understand the concept of time frames, which we're going to teach, and understanding the scenario of what's a good and bad signal. A lot of people think, hey, a good signal means it's going to tell me to buy here and it skyrockets 40%. That's unrealistic. I mean, it doesn't even make sense. But just going through on this time frame, again, buying in this range, we don't see any shorts, and it goes all the way up here. That's something you should be pretty happy about. So my thought is I think I'm going to give everyone access to God's Eye 2.0 just so that they can have these signals. I'm going to just think of a way to name them. I might even rename all of them a little bit with a little bit of a description in the name. So the names will get pretty long. But if I could at least explain, you know, this one, momentum or higher time frame and lower time frame, you know, I kind of did that on the scalper. But I want people to have a general understanding that, look, you might see this as a problem, but I promise you what it means is you just have to learn it. You know, we just have to be patient and know that you're going to have to learn it. So there were great questions. I'm going to cut this video off because I don't want them to go too long, but I'm going to continue to put them out. And I'm also going to give everyone access to God's Eye. I'm going to have my guy do that, work on that today as well, which is God's Eye 2.0. I got to change the name. So we'll see. I'll write a little explanation again that's going to give you a slightly earlier signal than the 3.0 because it's not going to have the protections built in. And what that will mean is that, hey, it might just work out perfect, right? Because God's Eye is built off something that is truly unique. It is a very unique momentum indicator that I invented, okay? That I have the rights to this particular indicator. No one else has it. Does not exist anywhere else, okay? And with that being said, you know, maybe you don't need the protections. It's just I don't feel comfortable not providing people with the option of having a protection. So I'm going to show you something really quick with the 2.0 on. I'm sorry if this is going way too long, but let's see what we have. Let's turn off SAR. And just making sure there's nothing else that's active in this. It's not. Okay. So what happened? In this case, on this exchange, we still had the short, right? But the immediate candle did show the buy right there. And that was the question. And then when you had this fractal, same scenario, you did get a buy. You know, it might have been a little late. You know, you might consider it late, but if you got in here, you're still talking about 6,700 to 7,600, anywhere in that range. You know, even when you started to see the rejections, that would have been a great move, great play. Same thing here. You know, anywhere in here, if you're buying anywhere in this candle, even at the close, once it broke through, you know, you got to take some profits. Nothing's perfect. Don't ever think you're going to get perfect with your profit taking. But then it also gave a short up here as well. The other thing it did on God's Eye 2.0 is if we start to, I don't want you guys getting into these, excuse me, definitely don't get into that one because that's a total different ballgame. I will show you briefly. ES means early sell, early short, or early sell. EB means early buy, right? Don't start getting into those. These are strictly momentum. You got to be a pro to understand this. I love this. I mean, this tool, God's Eye, is my favorite, right? This is my baby. And in my opinion, it's the best tool I've ever used in my life. But I don't see things the way you guys see them. I just don't. So, and you're not supposed to. How could I possibly expect you to see it? You know, imagine me going, you know, under the engine of a Ferrari and staring at it and thinking that I understand all the immense components that go in. Now, I'm not comparing this to a Ferrari. I'm just trying to give an example. So forgive me for that. I'm not saying like, hey, I'm a genius. I'm just trying to make a point that you do have to learn it, right? So ultimately, that's the key. But some of the benefits of this, especially in a high time frame, is you could enter something with a buy, right? And you might wait until you see early short because that's a clearer sign that the momentum has now changed, right? Because really what it is it's gonna be like this. Short is the weakest, early short. Then there's a neutral zone, then there's an early buy, and then there's a buy. But when it goes from, it will show you early buy going to buy. It's not going to show you buy to early buy. So some of these in here might have turned back to early buy in terms of the momentum. But that's just going to confuse people because it's almost hinting as if maybe they should buy again. So it's the reason why I don't print it that way. And maybe over time we're going to make a change to that. But I don't want it to show up that way. The other thing here, early buy, and then you see early buy again. What does that mean? It means it was early buy. It went to neutral, right? And then early buy again. But if I go ahead and show people that, they're going to sell their, the reality is I want people to make those decisions on their own and learn how to do it, because I'm not always going to be accessible. You don't want to have a tutorial 3 years from now on how these things work. So it's important to learn. But for the expert, they start to see, wait a second, this went from early buy to buy, a huge run up. Early sells or early shorts start popping up. Now it's going back and forth a little bit, but this should tell you that something's happening, right? The idea of a local top is coming into play here. And now once that momentum shifts, forget it. I'm out, right? Not only am I out, I'm running. And look at the drop that we get. Now you get a little early buy. Hey, maybe you covered there, and that's okay. These things don't have to be perfect. But you're understanding the market structure. If you're in a short, you're not buying an early buy. If you think the market structure is down, you shouldn't be looking for things to buy in that situation. So a lot of times you'll see these and it's showing you buy signals, and on a lower time frame, take it. If it starts on a low time frame and builds to a higher time frame, great. But don't look on a daily time frame for an early buy or a buy and think, hey, this thing should skyrocket because the signal said so. No, the algorithm's doing its job. It's making you aware of a circumstance, and that's it. And that's all it should do. And it does it very well. So here's an example of that. Again, I don't want you getting too much into that right now unless you think you're comfortable in using it. And of course, it's yours to use as you please. I just don't want people to get burnt by it. So I'll turn that off for a second. Another thing is, here's the potential buy, potential short. So what does that tell me? Well, here it's great because it's a local type of bottom, a fractal, right? We got a buy signal earlier, potential buy. It just means that there's a setup occurring that's a little bit different than what's been occurring, and therefore the possibility is there. Potential short appears here at the top. Great job, right? But there's also times like this where it says potential buy. This would have been, it's not a bad signal. It gave you time to be out flat considering where you took it, or maybe slightly down, but I don't consider that signal. What that is to me, when I see potential buy or potential short, it's use your discretion, right? It's just making you aware of a circumstance. Now, when I see these at bottoms, at fractals, then I'm thinking, oh, okay, interesting, something's changing, and I'll look for a signal to take that next move. Give you an example right here. Potential short near a top. All right, well, that doesn't mean I'm going to take it. What it means is if the candle goes lower than this level, I'm probably going to take that signal now. So here we are. The candle level was 79.29 when I got the signal, the close of that candle. Well, the next day, popped back, right? Because this is a level where people were saying, hey, we're going to hit 10,000. There was plenty of people making that call. We get it again, potential short. And look at that candle that printed on, potential shorts. That just tells you that we were close to a flip of some sort. You got two potential shorts, and then finally you got a sell signal. Even if you waited to the close of the sell signal, being that it was at a fractal top, in a situation where you got multiple signals and it was followed up by a short, that would have been enough for me to enter, which I was publicly in this particular trade from here. People know that. But regardless, it's a situation that can help you to shape your decision making. Where am I at? The other thing is, if you did buy this signal here, perhaps you saw the potential short and said, oh, wait a second, something's going on. I don't want the risk of being involved anymore, which could have given you an out if you chose to utilize that out. That's up to you. So I'm giving you a ton of information, but I'm trying to do it to be helpful. That's the idea. So I'm just showing you some of the other buttons that would have occurred that you could have utilized to assist yourself, and showing you how some of those signals that look like bad signals actually on different exchanges and or utilizing different algorithms within the three that you guys have access to might have assist you. So again, going back to another exchange, we see a different story on this one. This is the Binance exchange, and it looks like it did a great job. You still got that short here. That's on God's Point 2.0, but we were looking at Golden Child, and I was just intrigued by this because on Binance, it didn't give the short on this one. Binance obviously is the most, one of the most active. Obviously, BitMEX is extremely active, but it's extremely active because they allow extreme leverage. As far as actual participation, Binance is the smoothest. It's just that they don't allow shorting, which makes them terrible in my opinion. But it is interesting that you didn't get a short and you did get a buy. But if you turn on the other signals that came along with it, it did go ahead and give you those potential shorts there. Anyway, that's it. I don't want to go too long. If you see something that's just very confusing, let me know. I am going to make another video later as well. I'll talk about things like low time frames. I mean, brief summary just leading into the next conversation. On a low time frame, I mean, you should expect to see a million signals. I mean, if not, you may not have experience trading on that. A lot of people trade on a low time frame. They're trading with the intention to utilize leverage. So they'll look for a scenario such as these, and when they start seeing these fractals and shorts popping up, they want to jump in on leverage, ride a move. I mean, this was a huge move, obviously. I mean, something like this would have been an unbelievable. I mean, just no matter which one you took, let's just say it was here. Even if you got in a little late and you got out a little late, something like a 6% move. I mean, that could be 6 times your money. In the matter of a couple hours. So those are monster ones. So we're not even expecting that. Very briefly to get into that, you see a lot of signals, but the signals are relative to a bar. Now I'm not even on the scalper. I'll change over, I guess, just to give you a better example. But keep in mind, you got to keep in mind the market construct, right? So if you're in a situation to where you've been downtrending, are you looking for buys? I don't know. If you are, great. Maybe there's a reason for it. A lot of that basically ties into your TA. But normally you're going to understand the circumstances, and this SAR might come into play as well, to where you say, all right, well, when we got out of here, maybe when this buy pops up, I want to get in. And again, remember, these should be short trades because you expect chop. Because just how we looked at a daily, I mean, the reality is you're not looking at it at 100 bars. You're looking at it 15 minutes to print this one, and then it's going to be 15 minutes to print that one, and then 15 minutes to print that one. So we have to have a realistic idea of what we're looking at. But just as an example, if we're following this and all right, we're waiting. If we had a buy here, we wouldn't have really taken it because we're a little bit worried about how far this move can go. And then you get a situation such as this where the buy appears. If you waited for the candle to close, which is absolutely a prerogative, would you really wait beyond? I mean, this is 1.5%. The candle closed at a 1% gain. A 1% gain in 15 minutes just is massive. I mean, it is massive. Now, you can do a couple things. You can say, hey, well, maybe this is the move. I'm going to wait. Or you could get out with that, especially depending on what leverage you're doing, if any. And that's usually why you're doing a low time frame play, right? Otherwise, you should be working on a higher time frame. But if you're doing the leverage play, that was a massive hit for you. Same scenario here. If you decided to take it, maybe you said, I don't want this one because the SAR has been active for too long, and that would be fine. But if you did take it, again, and I'm referring to this short right there because SAR is on top, and you decide to take this at candle close, I mean, you eventually had almost a 1% gain and even close at a 0.5 point, which when you're talking about buying at leverage, most of these people that are actively doing it are doing small positions at 50 or 100x leverage to where they're feeling comfortable in a few moments time. And in this case, it's a 15-minute time frame. And I'll talk again on another video where we get into deeper, because what happens is you get choppy, right? You're expecting chop on this level. Look at this. How could you successfully build something that's going to call this to this, down to that, up to that? It just doesn't work that way. That's not realistic. What you want to do is build something that's going to give you enough signals that you can use some basic TA to then decipher what's going to make the most sense. Even something like any of these buy signals, you might say, well, wait a second. Once this buy signal triggered, nothing really happened. It was very choppy. All right, well, if you got out because of that, great. That's okay. That's your style. I understand it and I respect it. That just means that this trade wasn't for you. But it's the very first dot on the SAR. So here we are. We came out. We had a bullish engulfing, right? The SAR line was hit, which flipped us to the possibility of a short-term uptrend. If we took this trade here, now you might have been down 0.3, 0.4%, and you might not have liked that. You might have exited, and I'm okay with that. However, what we can see is it held you in a position where things were happening positively, and eventually you did get a breakout, which brought you to about 1.5%. If you were quick on the trigger and pulled, great. I like that type of action. That's a good move. But you would have still had an option to enter here again, or even here again. And you're going to look at somewhere in between a 1, depending on whether you entered here or here, a 1% to maybe 1.5% move within a few hours, which is massive. If you did one of those a day, you're rich at the end of the year. That's just how it works. So ultimately, those are the keys. That's what we're looking for. We're trying to see, how can we figure out a plan and a strategy that's going to allow us to utilize these tools in a way, in a fashion that's going to create more profit for us. So we'll talk more about that over time. This is already getting pretty extended, so forgive me for that. But I will go ahead and end this one right now, and we'll continue to talk more and try to assist you guys in sharpening these particular signals and understand them a little bit better. I can assure you that the power within these are dramatic. They can significantly help you and help you to create situations that are beneficial for yourself and setups once you're used to them. All right, I'll talk to you guys soon.